Good afternoon, everyone. This is Christy from Ahn Co. It's Friday, August 10th. I'm going to go over the markets for the day and week for you. So it was actually a very quiet week until we got to today. We had a USDA crop report that offered a whole lot of bearish information, especially into this soybean market. Came in here 785 million bushel carryout in the soybeans. That's an extremely large carryout level that we need to chew through, and we need demand to pick up to really eat away at that to help this bean market. It caught the bean market off guard. You really were expecting a slight increase in yields for both corn and soybeans, but not to the degree you got, especially into soybeans, 51.6 bushel per acre, and with that ended up with that large carryout. So overall, on the week, bean market down 40 1/4, today down 42 1/2. So if it weren't for today, you really saw a steady market in the soybeans. Same situation in corn, closing down 12 cents on the week, down 11 1/2 today. And if it weren't for today, really a steady market. Corn's been stuck between soybeans and wheat market, actually finding some support off the back of wheat earlier in the week, but just couldn't follow through with it. You did see a 4.4 bushel per acre yield increase into the corn market nationwide as well. It wasn't towards the top end of the range like you saw into the bean market. Some people believe you could even come up to a 180 yield overall nationwide. We didn't get there, but you had larger increases on the demand side of things on both exports and feed to offset it a little bit. That you just saw a slight increase there on carryout, but still an increase nonetheless. Didn't help that world carryout levels all increased more than expected as well for corn, beans, and wheat. Wheat overall mixed report, but when you have beans down 42, really weren't able to hold its own against it. And then it seemed like after beans started to break, you saw some profit taking coming into wheat after the nice couple weeks we've had there. If it weren't for today, you would have closed positive on the week for wheat, but after being down anywhere from 17 to 21 cents in the wheat market, that's where you struggled a little bit, closing down 9 1/2 cents here on the week on Chicago. Minneapolis down 4, Kansas City down 7 1/2. So a lot of pressure there. Over the cattle markets, actually pretty quiet overall today, slightly higher into the cattle market, slightly lower into the hog markets. Overall on the week, down over $2 on both live cattle and feeder cattle. That does follow suit with cash trade that fell somewhere between $1.10 and $1.12. So you saw that there. Cash trade on hogs continues to decline. Maybe thought you'd see a technical bounce in this hog market, but it wasn't able to hold on today. Outside markets also remain pretty negative against these markets as you're starting to deal with some trade backlash. Once again, sounds like tariffs were increased on steel imports coming in from Turkey, and that had a little bit to do with where we saw the Dow start to fade off today and the dollar continue to rise. So on the week, crude market down 80 cents, US dollar up over $1, and then the Dow market over 170 points lower, and that does put pressure on commodities and gives a little bit of a negative outlook to them as we move forward. So what we're going to be watching Sunday night is really whether we've had really ideal growing seasons. We haven't had many issues, but you're starting to enter a time frame that's extremely hot and dry. The forecast is looking like that as well, so people will be watching to see if they put any precip into the next couple weeks model, and then also just to see if we can make anything happen as far as that trade goes and where managed money came from here last Tuesday to last Tuesday. I do have to close with a disclaimer: trading in futures and options involves risk and loss and may not be suitable for all producers. Have a great weekend.